What's up, family? It's Coach Clarence here, and it's Wednesday, so let's share some wisdom. I've got a couple of your questions, so I want to answer them just in case you might have a similar question that needs to be answered. As you know, the guidelines and rules change all the time in this industry, so I want to address things as they change. But before I do, take a second to hit that like button, and if it's your first time on my channel, please hit the subscribe button so that you know when I drop a new video. That's very important. Also, when you subscribe, you'll get a notification every time a video like this drops. All right, here's the first question. Are there minimum property standards? Meaning, does Fannie Mae or Freddie Mac have a minimum property standard for bathrooms, as an example? Lady says, my client has one bathroom with only a toilet and a sink and no shower tub. Answer is, Fannie and Freddie do not address this kind of detail for the property, so lenders are left to their own requirements of their individual investors. All right, question number 2. One of my borrowers does not have a credit score, yet we are receiving an approved eligible in DU. Are we able to have a borrower with no credit score? Fannie and Freddie do not have minimum number of trade lines of credit debt, although some investors will have their own individual requirements in terms of credit scores. So again, as I say every week, each situation is different. Question number 3. Have the COVID overlays been lifted by Fannie Mae and Freddie Mac? That's a great question. We get that all the time. Fannie and Freddie, because they are both under conservatorships, are in step with all the guidelines and all the time frames for continuing or discontinuing a COVID-related overlay. Some flexibilities have expired, some have changed. Again, individual situation. All right, next question. On a cash out refi, is there any guideline that prevents a borrower to use funds from the refinance to pay out an outstanding federal tax bill? The answer is yes, you can, and it is required by some investors. It may have to be paid. Question. Can you please confirm that if a borrower has multiple retirement accounts and is of retirement age, that we can use all the accounts to show enough funds to prove a 3-year continuance, even if the distribution is only from one account? Answer is yes. If you can prove that it will continue, which certain retirement accounts will obviously continue, the answer is yes. We always want to see that funds will keep coming. Question. My client has been self-employed for more than 5 years and his corporation was opened over 3 years ago. Can we use just one tax return? Answer, that is not a decision made by an individual. Rather, the number of years of tax returns is driven by the automated underwriting system. So again, whatever DU spits out, that's what we're going to require. All right, so I have a borrower who is receiving a pastoral income of $9,500 non-taxable income per month as a parsonage income. We have documented this income with the VOE, a letter from the HR director, and the bank statements with proof of transfer from the church to his accounts. He receives no W-2s or 1099s. Our underwriter states that tax returns are needed because the income is subject to claiming and self-employed tax. The borrower has never filed tax returns. Well, unfortunately, in this case, that's a tough one, but your underwriter is pretty much correct. The income must be reported on tax returns in order to be considered. Any income that you want to count has to be shown, basically, in any situation. All right, last question. Our client has a 30-day account debt on their credit report. It was just opened 5 months ago and has a $444 current balance with a 0 payment. After closing, the borrower will have no reserves. Can we proceed with just using 5% of the balance as a payment, or can we not do that since the borrower has only had it open for 5 months and does not have 12 months to show the payment history? Great question. Again, every situation is different. Every investor is different. I will say it like this. This is really the first time I've seen that scenario, but unfortunately, I think you were correct in thinking in your last comment, basically saying you're going to have to use the 5%. The borrower must have the funds to pay off the balance in full. Without those funds, the loan does not meet certain guidelines. Since there is not a 12-month history of paying off this account each month, we're going to have to include 5% of that outstanding balance towards the DTI. All right, folks, I appreciate the questions coming in. We will try to bring up a topic every week to help answer your finance questions. Hope you enjoy these learning sessions. Keep the questions coming, and I'll keep the answers coming. And if I don't know something, I will find out. It is Wednesday. Enjoy your day.